It's not one of those jokes. It's not. It's not loading the dishwasher. I told you guys that one, right?
Yeah, you told us that one.
Is it the moist? Is it the moist thing?
No, it has nothing to do with moist. How? Just so that I'll ask Jay. Jay, how do you make someone with Trump derangement syndrome say how?
I don't know.
Oh, you got it. Okay. You couldn't just play with it, huh?
Welcome to Drunk Real Estate. Grab a drink and enjoy the show.
Hey there, welcome to episode 94 of Drunk Real Estate. I am Kyle Wilson, Ashley Wilson's husband, and we're recording on Tuesday this week and Tuesday going forward, right, Mauricio? That's how we're doing this.
How long are you guys gonna bust my balls for this? That's what I want to know. How long am I gonna have to deal with this? Is it like weeks, months? Like how long?
Well, apparently he asked Jay first. But he checked with everybody. Hey, can we move the podcast to Wednesday? We all checked with all of our spouses, our kids' schedules and stuff. We're like, yeah, that works. And he was like, oh, just kidding. Let's keep it Tuesday.
Well, I wasn't kidding. I was legitimately, trying to restructure my calendar. Then I just realized I had a conflict. I didn't realize I had a conflict on the new date. So
you got Jay's wife all mad at him. It was a whole thing, Mauricio. So just think about us next time. How's it going, though, man?
Dude, I'm almost done with my McAllens. That's how it's going. Look at
there you go.
Look at this. Almost done. I got my last. I'm going to finish it off today. And things are good. Busy.
If you're just going to drink one liquor the entire time for a podcast, you should put in one of those little decanters next to your, like on the back right behind you. And it could be like a showpiece.
That's a good. I've actually been. I must say, I've been really enjoying the McAllens. It's. I'm usually a wine drinker. We've been doing this pseudo fitness challenge, so I've been trying to lower the calories, and I figured, I don't know if it's true or not, but I figured I'd switch to Scotch, and I must say, I'm enjoying it.
Nice. Jay, what's up, man? How's it going?
It's going well. Spent all day rearranging my life to try and accommodate Mauricio, and so lost a day, but other than that, everything is good.
You didn't go to Costco? You didn't go to Costco to get some wine today?
I went to Costco and got
God, what is that? Oh.
Irish cream liqueur that
Jesus.
I am putting in my coffee.
That looks like a caveman's club. That thing's massive.
It is 1.75 liter.
You are definitely, by the way, you are definitely not on a cut.
Oh yeah, we scrapped that. You guys are such divas. You all had your own rules. I couldn't put together something for everyone, so I'm back above what I weighed at the beginning of that weight loss challenge. How about you, AJ? How's it going, man?
Heavier than when the weight loss challenge started, so right there with you. That's how I'm going. But because we're on a diet, I have my Diet Coke, of course.
Oh, nice.
And my red cup because I'm healthy like that.
Do you know how bad the aspartame is for you, AJ? Do you have any idea what the aspartame is doing to your body?
Preserving it?
Can't be any worse than all the drugs that are like just perpetually in his veins. So
that's true. That is true.
It's a counterbalancing act.
That could be next to go. I literally was just reading an article. I think like an hour ago, RFK Jr. announced that they're banning a whole bunch more food dyes. So aspartame can be
dyes are going. Aspartame.
Oh, the imports of Mexican cola, it's just going to go through the roof.
Yep. Real sugar stuff.
I'm drinking clear. Love this shit. It's just so nice, so easy. Fun. All right, AJ apparently has to actually take care of his kids today, I hear. So we got to get out of here quickly. Usually he's got Tessa taking care of the kids. He's an absentee father. But no, just kidding. I understand, AJ, with having to rearrange schedules to go pick up your kids. So let's get this show on the road because we have to talk about Jerome. Get that joke? Jerome Powell. With everything going on, J Money Powell, he's gone from the Daily News last year to page 6 in a matter of 3 months. Well, now he's finally back. And after a couple of comments he made during his last address to the public, he was doing pretty good a job of staying out of the tariff discussion and just kind of, floating along there. No one really paying attention to him. Inflation would go up a little bit, but then it would come down. He kind of just, no one really cared what he was doing until finally he was asked directly. And he admitted that tariffs will make inflation and employment more challenging. So, of course, what happened after that? This led to everything from name calling, public shaming, flat out talks of him being fired as Fed chair, So while most legal experts believe there's no basis for firing Powell, it doesn't mean that this administration won't try. So Mauricio, is this something investors should be considering right now?
First of all, I'm shocked. I'm absolutely shocked that you came to me first and not to Jay. This is like, it's unprecedented that I'm leading off the episode. I don't even know what to do. Like, I'm a little flustered right now. What caused this decision to finally what the audience wanted is for me to go first? What finally made you make that decision?
See, I figured usually you come so unprepared for these podcasts that you were probably looking up your segment during the first segment. So I thought I'd come to you first in punishment for putting us through all that rigmarole, and that you wouldn't be ready. You would just make yourself look like an ass. So let's see you do it.
This is actually him just testing our listeners to see how good they are at fast forwarding like to the second segment.
Dude, I think this is a fascinating topic because when I first heard this whole idea of Trump or any president removing the federal, the Fed chair, to me that sounded ridiculous. And then, well, what are you talking about? It's like suddenly Trump wanted to get rid of the Supreme Court. I mean, it just made no sense to me. As I started digging into it more, I realized that it's not a complete out of whack argument. Like, I'm not saying it's a argument that's going to win, but it's not a completely incoherent argument. In fact, it's got a lot of precedent, especially in Supreme Court decisions. And so I wanted to walk through kind of high level of what the arguments are. And I don't know, it's not a complete out there. So I was very, very surprised. The first thing I was very, very surprised is that if you go to the Federal Reserve Act, which is where all this starts, there's actually a provision in there that does allow for the president to remove the Fed chair for cause. Now, the problem is it doesn't say what for cause means, of course. Like, why would we want clarity on this kind of thing? We want as much ambiguity as possible. But there is a provision already in the Federal Reserve Act that does allow the president to remove for cause.
Now, in 111 years, it's never been litigated, right? So,
well, that's not true. So actually, there's a couple of Supreme Court decisions that I wanted to go through really high level. I don't want to bore everyone. I want to give the really high level stuff. But these are the arguments that are going to be made when this thing comes to fruition. One is this: the first case you're going to hear is from 1935, which is the Humphreys case, which is where the president, FDR, Frederick Roosevelt, decided to literally fire the FTC commissioner, Federal Trade Commissioner. Decided to fire him, and the Supreme Court said you can absolutely do that in the sense that, that you cannot do that, and that was a unanimous decision. But the key in that particular decision was, hey, the Federal Trade Commission is a multi-member commission. It's got actually 5 commissioners, 7-year terms, and the language of the Federal Trade Commission Act specifically says that you can only remove the commissioner for cause. And the cause specifically listed were like, if you're neglect of duty, inefficient, malfeasance in office. And so the president was trying to make the argument, hey, your values don't align with mine, kind of like what Trump is saying now. I want the FTC to do something. The FTC wasn't doing it. So FDR ended up firing the FTC commissioner just without cause. And again, the president argued, hey, I have a constitutional right under Article 2, Section 1, which talks about separation of powers. I can do that. And one of the Supreme Court decisions that he relied on was that the president was able to fire the postmaster general, like the person in charge of what we call today the post office. He was able to fire that person under the Article 2, and the Supreme Court allowed that. But in Humphreys, they said this is different because the postmaster is specifically under the executive branch. Like, that's what they do. They're doing executive stuff. They report to the executive branch. But when it comes to the FTC, it's an independent commission. It's got 5 commissioners, so it's spread out. They don't report or really take any guidance from the executive power. And so, the Congress, in coming through with the act, with this Federal Trade Commissions Act, has the power to limit whether you can fire or not fire the individual. And so the Supreme Court unanimously, 9-0, said the president could not remove the FTC commissioner, right? So that's the president says, can't do it. Fast forward to 5 years ago, in 2020, there was another case that came up where it was actually, I think it was President Trump, was trying to fire the director of the Consumer Financial Protection Bureau, right? And in that case, he was successful. And that's why people are starting to think, hey, maybe this Supreme Court is a little bit more amenable to removal of commissioners, because in that case, he was able to remove the director of the Consumer Financial Protection Bureau. But distinguishing factor in that case is that the director in that case is a solo director. There's no commission, there's no board. It's just one director, and he can. And because of that, and because he was, he was directly under that particular commission was under the executive power. The Supreme Court felt that he could fire if it was a single director that performed substantial executive powers. What's really interesting about that case, which I think is where I think the whole argument is going to fall apart, is that one of the conservative justices, Justice Kavanaugh, specifically had a footnote distinguishing this case from the Federal Reserve, which is ultimately what we're looking at. I want to quote it because I think it's quite critical. Justice Kavanaugh said the Federal Reserve Board structure and role are distinct in numerous ways, and this case does not involve the Federal Reserve. The court's opinion today, therefore, does not address the constitutionality of the Federal Reserve structure. So he
foreshadowed this issue 5 years ago.
Yeah, and I actually thought, so the bottom line is,
Jay, just remember too, back then, Trump was talking about firing Powell as well. And like very seriously, to the point where when he said that, like the market, like if you remember, the market went crazy for a little bit, worried about him getting fired.
Yeah. Yeah, so it was a 5-4 decision back in 2020, but they allowed President Trump to fire this director of Consumer Financial Protection Bureau. So they're kind of hanging their hopes on that particular case, or at least looking at it. And to your point, Jay, I think you mentioned this earlier. Today, there's actually two cases in front of the Supreme Court that also had to deal with Trump's ability to remove certain high-level officials of some commissioner. And now it's whatever, it's Trump v. Wilcox. It's the National Labor Relations Board and the director of this Merit System Protection Board. And so everybody's really paying attention to these current cases in front of the Supreme Court.
Those are already in front of the Supreme Court now, right?
Correct. They're in front of the Supreme Court. So the ruling of those cases will shed more light into the extent of what the power of the president is to remove these independent commissioners or directors. And so we're kind of really looking closely at these two cases. Now, I don't know when these cases are scheduled to be decided, but that's kind of where the Trump administration is hanging their hat on, is like, hey, we went from a unanimous decision that you can't remove to a 5-4 decision in favor of you can remove. But again, it was only because it was a single director, squarely in the face of executive power. The Federal Reserve System, as Justice Kavanaugh said, is kind of a separate animal. It's got a very unique position in our markets. Number one, it's a multi-member board, so it's much more analogous to the Humphreys case. It's a multi-member board. It really is more, monetary in nature. It is a monetary nature, and that's usually a reserve for Congress and the legislative department. So it's kind of like a quasi-legislative branch versus an executive branch. And so based on these case laws, unless there's something that comes out of these two new cases that are in front of the Supreme Court where people are flipping, you already have one of the conservative justices, Justice Kavanaugh, saying, he didn't say that it wouldn't apply, just saying these are completely different cases. We're going to do an independent analysis if this issue ever came before the Supreme Court.
So I want to make a bet. I want to bet you. I bet all of you. I bet you that Trump will say he has no intention. I bet $1,000 that Trump says he has no intentions and is not going to try to fire Jerome Powell.
He already said that. He said that this morning. So yesterday, he basically said he was going to fire him. Yeah, yesterday he said he was
betting money on it, or I would never bet money that Trump would say something because who knows?
Yeah. So yesterday,
wait, hold on, AJ. You said you would never bet money because Trump said something. You don't think he would ever change his mind the next day?
Never happened. It's never happened within the second he said it.
And I think this is why this whole discussion is important. So over the weekend, yesterday morning, Monday morning, Trump came out basically just eviscerating Powell, saying how he's the worst Fed chairman we've ever had. He's a loser. He's being political, all of those things. And it spooked the market. You wouldn't really think something like that could spook the market. But the reality is everybody knows that if he fired Powell, what he would do is he would most likely put somebody in who is going to do what he wants that person to do. And one of the things that we've been able to say about the Fed for a century is that it has, for the most part, been apolitical. It's been independent. Not going to say that they haven't been accused of doing things, but certainly we haven't had Fed chairmen in the pocket of any president for the last century, and that could change. And here's the crazy thing. Even if the Supreme Court says, no, you can't fire Powell, or Trump says, I don't plan to fire Powell, there's only a year left in Powell's tenure. So in a year, Trump basically gets to appoint the next Fed chairperson. And so it's very likely that what we're talking about today, even if it doesn't happen in the next week or 2 weeks or 2 months, a year from now, it's going to happen. Trump is going to put somebody in charge of the Fed who is most likely going to be there to carry out his wishes. And so we're going to see somebody who, for the first time, is clearly not an independent representative of the Federal Reserve. And as we saw yesterday when Trump—
Why do you say that? Yeah, why do you say that? I mean, just to remind everybody, Trump is the one that actually nominated and put Powell on the Fed.
He did, and then he got—
He also at the beginning of his campaign this year said he made a lot of mistakes putting people who weren't loyal to him, and he's going to fix those mistakes this time. So I like, if you're a betting person, you would think he would— those were one of the people he was referring to.
I think it's even simple. It's even simpler than that, though.
Yes, we are speculating.
But Trump has come out and said, I believe that the executive branch should have say in fiscal and monetary policy. And so he's basically come out and said he should have control, some control at least, of the Fed. So it's not a stretch to believe that he's going to appoint somebody that will take his opinion into account. I mean, we've seen that with a number of other secretary positions in this administration. And so there's no reason to believe that's not the case.
Every president does. They don't put somebody in that they don't think will carry out their wishes. That, like, could you imagine a Democrat being like, everything that I don't want to have happening at the Fed, but this Republican wants, I'm going to put him in. And so he'll do all
well, theoretically, AJ, they should just be picking the person most qualified, but I guess.
And they all do, but Trump won't.
We do have checks and balances, though, because Congress, number one, even when Trump nominates a new Fed, it's got to be with the advice and consent of the Senate. So the Senate has to approve the decision, number one. And number two, the Fed is an animal of Congress. I mean, Congress created this monster, created it through the Federal Reserve Act, and they can amend that, they can change it, they can say—
Well, Mauricio, can you explain this to me? Like, I thought they voted on policy, don't they? It's not like I didn't know that just changing the head would actually, it's not like they could just do the same thing as the president and make executive orders, right? Don't they always have to vote on their policies?
Yeah, but it's like the chairman, just like in any corporation, the chairman has such power, wielding power, because they get to set the agenda, they get to determine what they're going to vote on, and to be honest with you, the chairman's usually the one doing most of the work, and the other directors just kind of show up and they're like, yeah, that sounds like—
Look, here's the reality. Perception, like most things when we talk about politics and economy, perception is at least as powerful as reality. And the perception yesterday when when Trump was talking about firing Powell was that if he fired Powell, there would be somebody who was less independent and more, let's say, in Trump's pocket. And that was the only news that came out yesterday morning, and the markets tanked.
That's why the market tanked. I think it was because he'd try to fire Powell, not that he was going to put someone that was in his pocket.
Yeah, I agree with actually AJ on this one, where I think it's like having independence for the Fed is kind of a cornerstone of like the American monetary system and why we have the reserve currency and why, the world economy is based off of us. So I think taking that away spooks people more so than just having Trump put somebody in as because if he's able to, like, the idea of him being able to fire the Fed chair means that any future president could, right? And so that means that every single time a new president comes in, they're just going to put in their own lackey, and we're no longer going to have independent. It's just going to be a Fed chair every single time who is a puppet of whoever has the presidency. So I think that's what people are scared more so than someone has a Fed. But
I will push back on, again, you've got midterms coming up in 18 months or whatever. And so if that ends up being the case, Congress can always amend the Federal Reserve Act. They can change the rules. They have control over that. Plus, they obviously have to approve and consent to the nomination. But I think the main thing the markets don't like is, yes, part of it's in the independence, but the other part is they just don't like uncertainty. So at least with Powell, you know what you're getting. If suddenly Powell's out of there and you don't know who the new Fed chair is, and you don't know whether they're going to be influenced by Trump, there's just more uncertainty, and the markets generally don't like uncertainty. Like, you can give me the worst Fed chair in the world, as long as I know who he or she is, I'm good, because I can then, trade the way.
Like they say, what are the rules? What are the rules we're supposed to
That
be
was
playing by?
the best argument for voting for Harris over Trump during the election. Was at least Harris, you knew what you were going to get. You wouldn't be happy with it, but at least you knew exactly what you get. Trump, you had no idea. You had no idea what was coming. You were just hoping that it was going to be better.
I think one of the big things that we've talked about, I don't know if we've talked about it on the show, but definitely amongst us and in conversations that we've had, is that the Fed could end up in a very difficult position in a few months. The Fed has two mandates. They have two jobs, essentially. One is they need to ensure that the economy keeps chugging along and we have full employment. Basically, they need to make sure we don't go into recession. And they do that when things get bad, when we start to see higher unemployment and recession, they lower interest rates. And then their other job is to make sure that we have some level of price control, that we don't see too much inflation. And so if we start to see inflation, what the Fed will do is they'll raise interest rates. And so depending on where the economy is, if things are going downhill, they lower interest rates. If things are like chugging along and we see inflation, they raise interest rates. If we end up in a situation of stagflation where we see at the same time recessionary indicators like high unemployment and inflation, the Fed's now in a position where they need to decide which of these they want to tackle. Do they want to lower interest rates to fix the recession, or do they want to raise interest rates to fix inflation? And whichever one they choose to do is likely to make the other one worse. And so this is a really, this is going to be a pivotal decision moving forward. Again, you guys can disagree with me and pretend like that it's 50-50, but the reality is Trump has made it clear that he thinks lower rates is the most important thing. And so it's highly likely that whoever he puts in charge of the Fed, he's going to make sure that person has an inclination, if they have to choose between low rates and high rates, they're going to choose lower rates. And if that's the case, the big risk, if we're in a position of stagflation at the time, the big risk is that it forces or it drives inflation even higher.
Yeah, but I think what Trump's position has been is that he feels, whether he's right or wrong, is that inflation, we don't have an inflation problem anymore. We're already at that 2.5%, or it's under control. So why can't, close enough? And the question is going to be, even if he brings in somebody else to lower rates, and they do lower rates, and suddenly inflation spikes to 5, 6, 7, 10. I mean, you and IJ have a bet going on. I don't know what the terms are, but like, I still think you're going to beat that 9%.
Transitory, baby. It's transitory, Mauricio.
Before the end of the decade. Before the end of the decade, you're going to test that number. And so, so the new Fed comes in, lowers rates artificially too much, and now inflation's at 7, 8, 9, 10%. Is the Fed going to just be like, oh yeah, well, we'd rather have lower rates?
But that was Kyle's argument literally last fall. He's like, we're going down, we're tracking, that the Fed acts too late, right? That it's like, you wait until the problem's here, then you try to correct it, instead of saying inflation has been going down, 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 we're on that trend. You're going to wait till it's a problem and then try to fix it. And, because the Fed is notorious about that, right?
Trump called it out.
Transitory.
They're always too late, though. They're always too late. That's the way they react.
Let me defend the Fed here for a second. The Fed, they're always late because we say that we see what happens, and we say it was obvious that was going to happen and they should have taken action earlier. Let me ask you guys a question.
I agree with you. I 100% agree with you. I think they shouldn't do anything till it happens.
Right. And so, we've made prediction episodes for the last 2 years now. And have we been anywhere close on our call of a recession for 2 years?
Every time. Like, we are 100% correct at predicting a future recession that will happen. The timing may not be right, but
right. But that's the whole point. That's the whole point with the Fed. If Mauricio had been in charge of the Fed 2 years ago when he was calling for a major recession, don't get me wrong, Mauricio, we all were, but I think you had the biggest recession call.
You were the earliest.
You were the earliest and biggest.
Earliest and the biggest.
So if you were in charge of the Fed at that point, you might have been lowering rates, and here we'd be 2 years later, and it would be like that.
See, Jay, I only disagree with you on one thing about Powell's job being hard. I think it was harder before tariffs, because at least he's got an out now. Like before, I think Powell coming into this whole thing was kind of in a no-win situation, and there was a real risk of stagflation. There was like of acting too early, too late, all of these things, and I don't think he knew what to do. And then all of a sudden, Trump comes in with his tariffs, and now he held off for long enough, basically calling it off, and now he had to step out saying now, like he had to protect himself. He had to say, okay, these tariffs are going to be a real problem for me keeping inflation down and keeping employment in check. And he's planting the seed that months from now, all of a sudden inflation spikes, unemployment spikes. He's going to be like, it's tariffs, man. It's nothing. It's not like we're doing everything we can. If you look at the trends were all going down. Employment was holding steady. We were doing a good job. And then somebody came in, I'm not going to mention who, and did all these tariffs, and that's going to be inflation. So it's not my problem.
Trump's doing the same thing. I think that's what he's really doing. He's laying the foundation to say, hey, when we have this thing fall apart because of his tariffs, because I know he's got an agenda that he wants to do. And there's going to be
Trump's always good at that. Powell didn't have that before.
Yeah.
And now he does.
He does, but he's going to be like, dude, the reason we have inflation is because this loser guy didn't lower rates when he was supposed to. Had he done that, we would have been just fine. And so I'm going to blame him. They're going to be blaming each. Trust me. 6 months from now, there's going to be a crossfire of blame, and everybody's like, "Hey, it wasn't my fault; it was this guy's fault."
Yeah, at least, I guess now at least Powell has someone to blame it on, because before it was just him, right? And that was my point in the intro, where the back end of last year, like every single news article, every single week for the whole week leading up to the Fed meeting, for the whole week after the Fed meeting, was all like, oh, let's wait for the Fed. No, and it was all pictures of Powell. And now he's got this kind of plausible deniability. His picture's not up on the news every day. And he's kind of like, he's probably sleeping the best he's ever slept.
So can I come back to the original premise? Because I mean, obviously, I unlike you guys, I actually have, real work and I'm busy and stuff like that. You guys are just, twiddling your thumbs.
Says the only guy here who doesn't have a job. Jeez.
But I mean, I can see that Trump today came out saying, and I quote, I have no intention of firing the Federal Reserve Chair Powell. But do you think he's going to change his mind? Because as of last week, the White House was confirmed that the Justice Department was looking into, and maybe they looked into it and said, hey, we don't have a chance. Maybe that's what's going on. But do you guys still think that it's all rhetoric so that he can eventually blame someone? Or do you think he's still looking into that possibility of seeing if he can get rid of Powell?
The same thing it was last time. Same playbook.
Or is it just possible he was getting some bad press and this was a distraction?
Or the market dropped 1,000 points yesterday after he said he said all those bad things.
Yeah, but AJ's been telling us that that's the plan all along because he wants to get interest rates down. So if we can crash the economy, we got to restructure our debts, right? We've got all this debt coming due. We want lower interest rates. So hey, let's crash the market.
And like it's the same thing he's done.
But that was the crazy thing yesterday. We had 1,000-point drop in the Dow, and the 10-year was up.
It's not doing what he wants it to do. That's why he started to lash out. That's why he started to lash out at the Fed. So that's what happened. Markets were crashing. The yields didn't come down. And guess who he turned on? Powell. My plan should be working. It's your fault, Powell. But too, we've seen this with Trump already. So he went after Powell in the last term. It's your fault. You got to do this. You're an idiot. You're a moron. I'm going to fire you. And then he blamed Powell for the next years and still does. And so it's the same playbook. He's going to do the same thing. Anything happens, it's going to be Powell's fault.
Hey, by the way, I'll take exception to the markets are crashing. I mean, gold is going berserk. The gold is not crashing. Let's put it that way. It intraday, it hit the spot, almost hit 3,500. The futures hit 3,500, but the intraday hit just shy of 3,500 today or yesterday.
Yeah, a couple of weeks ago, I was talking to you guys about like offloading some of my gold positions when it was at 3,200. So I appreciate you talking me out of that.
Well, I don't give investing advice on the show, but note that the gold to silver price ratio is about 40% higher than average. So some people might argue that gold is priced too high. Others might argue that silver is priced way too low.
I'm hearing more so that silver's too low. Not to mention silver's an actual like commodity, like usable, right? Like gold's just for the store
Once
value.
China stops buying gold, it's going to hurt. because they're gobbling up a
I mean,
lot.
AJ, your $100,000 watch, is that gold or is that silver?
This is, I don't know, how much are these Apple
It's an
Watches?
Apple Watch.
So it was a cheap knockoff from China, but with tariffs, it was actually pretty expensive.
Exactly. My cheap China knockoff is now like $1,000.
All right. Well, so it sounds like we might be able to put this off until the next time that there's some bad press about a different policy, and we can bring up Powell again, and then we could shout about that and distract the media, and then not do anything about it.
Are you telling me that I just spent all this time researching whether Trump can remove the Fed chair, and I was reviewing Supreme Court decisions and the Constitution, and now you're telling me like it's all for naught?
Hey, he said it
He said it as of this week.
today.
Yeah, I think we've got a week reprieve. We'll come back to it. Say next week when
Keep in mind, we're recording this on Tuesday evening, so by the time you're listening to this on Thursday or Friday, don't trust anything we're saying. It could all have changed.
Well, usually what happens, it'll be something like Powell has his next Fed meeting, right? And he has to stand in front, and the reporters are just going to poke at him. They're going to try and say something. And if he says something, then it's going to come all up again, and he's going to get pissed off at him. But for now, I think we can move on. You good, Mauricio?
Yeah, whatever.
Well, I want to get to our main segment of the night, because it's by AJ, not Mauricio. We talked last week about the possible end games for tariffs.
Wait a second. This is AJ or this is me?
Or sorry, Jay.
Sorry,
Jay.
Jay, they didn't tell you that they switched it to me now. It's not your
Go
topic
for it.
anymore.
I'm sorry, Jay. This is about Trump, so I just assumed AJ was going to be the one.
When I heard main segment, I just assumed me. But okay.
Before you intro, Kyle, this topic though, can we just please make sure this does not turn into a TED Talk dissertation? Like, can we put a timer on it, or can we
put in brackets short?
This one needs a little bit of time. It's not going to be ridiculous.
I'd rather AJ than introduce the topic if it's going to take.
It's only we don't want TED Talks only when it's not Jay. Other than that, it's okay.
I don't always give TED Talks, but when I do, it's Jay.
I mean, at the end of the day, Jay is going to talk about a hypothetical accord that we don't even know is going to happen. But
can you let me do the intro?
Do you even know what an accord is?
It's made by Honda, and the tariffs just went through the roof on it. We talked last week about what the possible end games are for tariffs currently enacted worldwide, but has been difficult since things seem so tumultuous and changing from day to day. Although most people believe that tariffs are being used to address multiple agendas, there are some who believe that this is all leading towards a single end goal. And one of the prevailing theories of this is something called the Mar-a-Lago Accord, which is in spirit of the Plaza Accord and the Bretton Woods Agreement that came up before it. So, Jay, why don't you break down briefly what a Mar-a-Lago Accord would look like?
Can we emphasize the word briefly, please?
So I'm going to talk, and you can cut me off, and the listeners will be pissed off because they want to understand this. And so I need to do it.
Wait, say that again. You think our listeners aren't smart enough to understand the wisdom of Jay Scott?
You're cutting into my time. Okay. So there's this guy. His name's Stephen Mirren. He's the head of Trump's Council of Economic Advisors, which is
This is going to be a while, guys.
Think tank at the White House. Anyway,
if you guys need to go to the restroom, this might be a good time. AJ will summarize the next 20 minutes that Jay's going to go in.
I'm going to summarize. Here we go. So,
but actually, Stephen Mirren, I think we should point out that he actually is pretty well credentialed.
He is. 100%, and he's an economist guy. He's not just he's not Peter Navarro who wrote.
He's not head of the WWE and given a cabinet position.
Peter Navarro who wrote papers and then admitted that he made up fake names to use as sources because that was more credible than using his own name. So anyway, Stephen Mirren wrote this 41-page paper. I don't remember the exact name here. If anybody wants to look it up, we'll link to it. A User's Guide to Restructuring the Global Trading System is what it's called. It's a 41-page paper that tries to solve or talks about how to solve three specific problems that we have in the U.S. Number one, bringing manufacturing back to the country. Number two, getting the rest of the world to share in the cost of trade and defense. It's no surprised that the U.S. spends a whole lot more money defending the world and defending trading channels and basically spending money just protecting the world. And so number two is trying to figure out how to get the rest of the world to participate and contribute more to that cost. And then number three is fixing our debt issue, which we all know is way out of control and needs to be fixed. So he wrote this paper that kind of was geared towards how do we do those three things? And his argument was that the global trading and currency system is fundamentally broken for one specific reason. And that's because the US dollar is too strong relative to other currencies. And if you don't understand what that means, go listen to our episode last week where we talked about the dollar. But basically, he argues the US dollar is too strong against other currencies. And the reason it's too strong is because we have the world's reserve currency. We can make the rules when it comes to currencies. And for that reason, people and governments, they want lots of US dollars. US dollars are safe, they're valuable, and so people like to collect US dollars, and they use those US dollars to buy US debt, US Treasury bonds. What's the best way to get US dollars? It's to sell stuff to us. You sell stuff to us and we hand you lots of US dollars. And so the more stuff other countries sell us, the more dollars they get. And so there's a huge incentive for other countries to export stuff to the US in exchange for dollars. The more stuff they sell us, the more dollars we send them, the more dollars we send them, the stronger the US dollar gets. Okay, so all good so far. Now, we like the fact that the US dollar is strong. A strong dollar means that there's confidence in our currency, there's confidence in our economy, and we're going to be the reserve currency for as long as the US dollar is strong. But there's also bad sides to the US dollar being strong. And the heart of Stephen Mirren's paper is that we need to weaken the US dollar. That is the way we solve all of our problems. And he proposes that we do this with aggressive tariffs, the exact same thing that Trump's doing, that we implement aggressive tariffs to basically take some confidence out of the sales of other countries, to reduce imports, at least for a while, and reduce the value of the dollar. And when you reduce the value of the dollar, a couple things happen. First, it makes imports more expensive into the US, so we import less stuff. And it makes exports less expensive, so other countries can buy more of our stuff because their currency is worth more compared to our currency. So this accomplishes the first goal. If we can reduce the value of the dollar, we accomplish the first goal, which is we bring manufacturing back to the US because, again, it's cheaper to make stuff here and export it than to import it. Next, the paper says we need to leave those tariffs in place forever, to some degree. And we basically, we create what's called a tiered tariff system. So for those countries that played nicely with us, those countries that say, we're going to be US friendly, we're going to do what you guys want, we're going to do what you say, you're going to have low tariffs. For those countries that don't want to play by our rules, that don't want to play nicely with us, there's going to be more tariffs. And so this kind of accomplishes that second goal. We can basically tell the rest of the world, you want lower tariffs? Well, you need to share in the cost of defense. You need to share in monitoring trade. You need to do all those things that we've been doing before. You need to contribute more. And if you do it and you're nice to us and you contribute your share, we're going to lower tariffs for you. If you don't do it, if you don't contribute your share, you're not nice to us, we're going to keep giving you high tariffs. So that gets the second piece, which is it gets the rest of the world, presumably and theoretically, to share in all of this responsibility. Finally, the third goal is to fix our debt issue. And what he argues is that once we have all these countries that are basically clamoring to buy our debt because we've reduced the value of the dollar, we're exporting less stuff, so there's less dollars out there to buy our debt. And these countries, they're desperate to buy our debt, but they have fewer dollars to do it. So there's a much higher demand to buy our debt. That gives us a ton of leverage to basically reshape all the terms under which foreign countries buy our debt. And specifically, we can do things like going to China, for example, and we can say, China, you've got $800 billion in 5 and 7 and 10-year bonds. Well, we don't want you to have 5 and 7 and 10-year bonds because those are expensive for us. We want you to trade those 5 and 7 and 10-year bonds for 30-year bonds or 100-year bonds that pay 0% interest. And the theory is that if we have enough leverage over China, if we say, look, you don't want high taxes, you want to be able to export to the US, you're going to have to accept this deal where you trade in your 10-year bonds for 100-year bonds at 0%. And Mirren believes that China, if we use the carrot and the stick the right way and we put enough pressure on them, they're going to be willing to trade their bonds that we're paying high interest on for 100-year bonds that we pay essentially no interest on, and now our interest payments for the next 100 years go away.
Why wouldn't they just buy gold if they're going to get 100 years zero interest?
I'm just telling you what the paper says. So that's what the paper says.
Mauricio, they would do it to appease us. They would do it to appease us because the alternative is worse, I guess, is the thing.
I'm sorry, I didn't realize this was still part of the TED Talk. Go ahead.
Yeah, but that's it. And so those are the three goals, and that's how he believes those three goals can be accomplished. Interesting thing is that it seems like Trump kind of latched on to the tariffs. He's always been a fan of tariffs, but it seems like he really latched on to tariffs. So at the beginning of this whole tariff thing, a lot of people said Trump's carrying out this playbook, Miran's playbook of high tariffs.
Well, and also, Jay, didn't Bessent, his other, like his Treasury Secretary, did a similar thing, right? Wrote his own paper, and he's been, right up until he kind of became part of the administration, he was really talking about this, and then all of a sudden he became part of the administration, and he was kind of like, oh, he's just going to do what he wants to do, I don't know, and
that's kind of what Miran said the last couple of weeks, which is basically, yeah, this isn't quite the way I would have done this. This isn't quite what my paper says. If he changes a bunch of things, he could probably accomplish some of the things I've written, but the way things are playing out now is not what I suggested. And so while it may look like we're taking steps towards carrying out this missive of high tariffs to restructure currencies and the global trade and our debt and all of those things, in reality,
I think it does say something that basically the two most well-qualified financial advisors in his administration have both talked about this as a possible solution, or even their preferred solution for getting out of this, and it's mirroring pretty closely what they were saying right now.
And just to defend Jay before he gets all this hate mail that he usually gets after every episode of Drunk Real Estate, we this is not a conspiracy unprecedented thing. I mean, we have for those of you who haven't heard, we had the Plaza Accord back in the mid 80s that basically was addressing similar issues. It was when the US dollar was extremely strong, and there was a coordinated effort with all of the major economic players back then, which is different from who they are now. Even West Germany was part of that deal, which doesn't even exist anymore. But they had an accord, an arrangement where they were going to have a coordinated effort to devalue the dollar because the dollar had gotten so strong, it was causing all kinds of issues. So this is not something that is unprecedented. Actually, it's something that happens every 40, 50 years.
Right, yeah. The one before that was at Bretton Woods, was a similar agreement.
Yeah, there's always these agreements that just kind of like, we need to reset the system. The system, the way it's working, isn't really working. Let's all get together in a room. This one just happens to be the Mar-a-Lago Accord, but last time it was it was the Plaza Accord, which I think Trump owned at some point in New York. But yeah, that's where everybody gets together and said, look, the system isn't working. We need to rearrange the system, and here are the terms of the agreement, and we all agree to that. So this is not something that's completely out of whack.
No, it's not completely out of whack. And I think, these are smart guys who have I think if they were able to actually write the tactical playbook and carry this out exactly the way they wanted, there'd probably be more likelihood that this could be successful in one or more ways. But it seems like Trump has kind of latched on to one piece, big tariffs, but is doing that with very little nuance. And there are issues with this plan. A couple things. One, that last thing I talked about, which we basically try and strong arm Japan and China and Canada and all the other big holders of our debt to trade in their short-term bonds for 100-year bonds at 0%. The world's going to look at that as a default on our debt. They're going to look at that as the U.S. is defaulting on the debt by strong arming everybody into not taking the payments that they're owed. And my take is that perception of a default is going to be almost as bad as a default, and that would crush our economy. So I think, for me, that one's off the table first. Yeah,
this is a good chance for me to talk about we've talked about it a little bit on the pod before, but this is one of my favorite economic subjects, actually, which is there's this paradox out there, this dilemma that's called the Triffin's dilemma, Triffin's paradox, which was something that I think it was some economist back in the 50s or 60s came up, which basically is, in my view, is actually predicting what's going on right now, which the Triffin's dilemma basically says something to the effect of, when you have the world's reserve currency. You have to supply the world with your currency, because that's how, if everybody's going to be using the currency to buy and sell and to get debt and to repay debts, you need to supply. It's your obligation as the reserve currency. If we all agree that the dollar is what's everybody going to use, you've got to provide that dollar to the world. And the main mechanism, at least back in the 50s and 60s, that you do that is through trade deficits, meaning you export less than you import. So more dollars are going out to the world, and that's how you actually supply the rest of the world with dollars. And Triffin's dilemma basically states the problem we're having today, which is, hey, at some point, the interest of the United States is going to conflict with that necessity to export dollars and provide the world with US dollars, specifically when it comes to manufacturing. In order to export all these dollars, you have to have a trade deficit, and the trade deficit basically puts a hole into your manufacturing businesses, which is exactly what's going on, and exactly what Trump is trying to reverse, is trying to get more manufacturing in. So on the one hand, yes, the U.S. interest is, let's bring all these jobs back to the U.S., let's bring the manufacturing back to the U.S., but the flip side of that is that if there's less of a deficit, of a trade deficit, less dollars are going out into the world that people need to go buy stuff and to, more importantly, repay all those debts that they have that are denominated in dollars. When people borrow money abroad, they borrow in US dollars, which means their repayments are in US dollars, which means they need US dollars. I think you said something, Jay, that something about needing US dollars. They don't want, I'm sorry, not wanting US, people want US dollars. They don't want US dollars. They need US dollars in order to repay the debts that they've taken out over the last decades or 2 decades, because there's a whole system out there where banks are lending money to people and they're lending in US dollars, which means they've got to get repaid in what? US dollars, which kind of keeps this demand going.
Here's a crazy, crazy paradox. If we want to bring U.S. manufacturing back to the U.S., or if we want to bring the manufacturing back to the U.S., it is going to cost trillions upon trillions of dollars. We don't have liquid, most businesses, trillions and trillions of dollars. So what they're going to do is they're going to borrow that money. The government's going to help finance that, but spending trillions and trillions of dollars to bring manufacturing back to the U.S. is going to require us financing trillions and trillions of dollars. How are we going to finance trillions and trillions of dollars? We're going to sell debt. And who's going to buy that debt? Sure, we'll sell a lot of it internally, but we're also going to rely on other countries to buy that debt that we will then use to finance the domestic manufacturing. The more debt we sell to other countries to finance domestic manufacturing, the stronger our dollar is going to become as they buy that debt.
Why is our country spending the money on the manufacturing?
So if you want to build a factory in the U.S., where are you getting that money from?
Yeah, but why is the government doing it? Why isn't corporations doing it?
I think he's saying they're going to have to, in order, like, we have such a big gap to fill that we're going to have to subsidize it somehow.
Companies like Apple and Tesla and Ford, they can build factories because they're billion-dollar companies. But let's say you want to build a factory you sell toothbrushes, and tariffs on toothbrushes are ridiculous, and you want to build a factory to sell toothbrushes. You might have a $10 million a year business selling toothbrushes. You can't build a factory for $10 million. You're going to have to get some...
Or more like relevant right now is like a steel plant, right? Like if you want to put in a steel plant, he's trying to get steel plants coming back. Like those things aren't cheap. So like
this is where it comes in, and I actually made this. So if you look at the actual current infrastructure
fancy. What is
within
that?
the United
What are you showing us, AJ? Come on, that's fancy stuff. What do you got?
slide projector with the lamp on it. I want to see that
and stuff. The technology on the screen is hard. So the thing though with manufacturing in the United States, we've lost completely infrastructure in some industries, like gone. Like not only the infrastructure, we have no skilled workers to do those things. The infrastructure's here. People are like, I don't know. What do you want me to do? But that's not true to every industry. So the steel and aluminum, our steel and aluminum plants are not at near capacity. And we have infrastructure there. Auto parts, aerospace, defense, industrial equipment. We have ready infrastructure there for them. When you get into things like semiconductors, consumer electronics, solar panels, batteries, and mass apparel, no, we don't got anything. Like that is something that you can't bring into the United States.
And not only that, the whole supply chain for that It's overseas
Exactly.
too.
And it doesn't exist anymore. So there's certain things in the United States that we can incentivize to not only continue, but expand, and in a big, big way that we already have infrastructure for, and we have. But there's other pieces that we don't. We don't have the supply chain. We don't have the workers, and we don't have the infrastructure. And I think that's why a lot of this conversation gets, it's not so much like you can or can't do it. That's not actually how it works, right? There's some things that I think the United States, we have to spend on. The CHIPS Act was one of the best things that I think we did. And the Biden administration starting that doing the CHIPS Act, that is a necessity. Like, we have to have that. There are so many pieces of our functioning in our military, in our government, in our daily lives that we outsourced to make it cheaper. And we outsourced it not to our allies. That's crazy. Like, our largest adversary, we gave control over main critical infrastructure of our economy and our security as Americans. That is totally wild to think about that.
But here's the alternative. The alternative is to some degree socialism.
Why?
No.
Well, look at farmers. Look at farmers. So how have farmers survived for the last 2 decades?
They subsidize independent.
They subsidize the
individual
government.
farmers.
The government hands them money. That's socialism. The government is basically controlling those industries.
But the reason you subsidize that's the issue, is that we are addicted to cheap stuff, right? And so it's like, yes, we've outsourced the manufacturing. If we bring back manufacturing to the U.S., we've got to pay $15 an hour minimum wage versus $3 an hour minimum wage in another country. So the answer to your question, AJ, would be like, well, yes, we shouldn't have outsourced it to our enemies. Let's shift that and outsource it to our friends. Maybe it goes to Taiwan or it goes to whoever we consider to be our friends. But bringing it back to the United States would mean, by definition, higher prices, which would mean one of two things. Either one, the U.S. consumer just has to suck it up and just live with 20% higher prices, or the government can come in. That's where they have to sell debt and treasuries to subsidize that industry in order for them to compete.
Well, I think this is actually a good rollback to the Mar-a-Lago Accord then, because the Mar-a-Lago Accord in essence would have people, if you sign on to this, and I will get to military in a sec, if you sign on to this, you're basically declaring an ally of the U.S., right? Like, if you come in and you can have, I've heard 2 versions. Jay kind of described it as kind of you're in or you're out, but I've also heard the like kind of green, yellow, red buckets.
Tiered.
Right. So like green is like someone who signs in fully. They get all the benefits of the U.S., military, banking systems, no tariffs, all that stuff. If you're green.
Dollar swaps.
Yeah, yellow is kind of you're friendly, but you negotiate your own terms with the U.S. You kind of have your own trade agreements with the U.S. And then red is adversaries, which at the moment is clearly just China. At the moment, where there's only one country who's getting 100 billion in tariffs. So that's a good jumping off point to say, okay, hey, like there are some things that makes no sense for us to try and onshore. But we would want these in the hands of our allies. And let's draw clear lines of who our allies are. Who do we have clear-cut trade agreements with? Who do we have clear-cut military agreements with? And therefore, we could keep a little bit more, have a more secure borders.
But the challenge with the allies, though, is that these countries have different leaders. So 1 minute they're an ally because it's some president's there, and then suddenly a new president comes in, and suddenly it's a completely different thing.
Yeah, but Canada was until 2 months ago.
Man, you could have some random president who just goes crazy and withdraws from the World Health Organization and the Paris Climate Accords, and you could just have wild card presidents do stuff like that.
Like, you don't have they're still allies. China was never an ally.
I mean, we've threatened to annex Canada. I mean, I'm not sure they consider us an ally right now. If you threaten to come take over my house militarily, I'm pretty sure I wouldn't call you an ally.
Well, their laws do. So go to Canada today. How's that work? Right? Go do trade with Canada. Besides tariff stuff, how's that work? We're still infused with their government, everything else. So we're confusing the signal with the noise here. And the problem is that we have is globalization did not play out and play out all the promises that it was meant to. At the end of the day, we are a nation that consumes more than we produce. That production was offshored to other countries and made them stronger and more powerful. This production hollowed out America, which was supposed to lead to everyone just getting paid higher jobs. But the more that we hollowed out America, our jobs, our means of production, we actually saw the lower quartile wages flatten for decades, like we've never seen. The upper incomes, as we financialized our industry, sold off America, collateralized everything else, it worked for the wealthy. This works for the rich, while the lower halves that aren't owners and asset owners, they don't get anything from it. Why? Because there's no production. All we have is assets. While the other countries, our companies are investing infrastructure of production. So we don't produce, we borrow more than we spend. We financially manipulate and we collateralize assets together, all financial products. The wealthy get richer and the government props up assets. So there is a problem when it stops working. And America has universally said over the last 10 years, it's not working anymore. Right? That's Obama and Trump. They're both change. We want change. We need it. The system doesn't work for us anymore.
I love that quote, AJ. Confusing the signal with the noise. Love that one.
Well, and I do want to bring one thing back to this too, in that we talked about the first two prongs, but the third prong, you absolutely can't separate it when you're talking about this. And it came up in the Plaza Accord and it came up in the Bretton Woods Agreement. And so it would come up in any Mar-a-Lago agreement too. And that's military spending, right? Military protections. We basically agreed in those accords that we would protect, like the trade of goods, militarily wise. And we've continued to do that. And you've seen it, there have been little snippets, just like we're looking back at Trump's two advisors, how they used to say things about the Mar-a-Lago Accord. We've seen snippets about Trump's not happy about how much we are spending military wise compared to our allies. You could see when he did his address when he was first elected at NATO, he basically came right out and said, NATO back in 2014 said we want to get everyone spending 2% of their GDP on defense in each country. Some of them have stepped up and done that, but there's still quite a few countries that aren't spending 2%, even 2%. And America currently is at 3.4-ish% of their GDP. And if you just look at the numbers, if you want to be, Fox News side of this, you could just take the side where the U.S. spends 55 basically $1 billion on defense a year, and the all rest of NATO combined spends 353. The whole NATO combined.
Yeah, Canada's at 1.5%. I think they're just trying to get to 1.7.
Right, and so his point is that basically when we made these agreements back in the day, that we were going to police, we have to restructure this because we are now world police right now, and we're paying much more than our share to be world police, and we're not getting all the benefits. I guess the argument, kind of the crux of this, is us having the world reserve currency. Is that a privilege or a burden? Because it's kind of gotten into the territory where it's becoming a bit of, we have to hold it.
Other people don't pay their fair share and hold to their deals. Heck yeah, it's a burden. What it becomes is we're getting used. If everybody would actually do what they should be doing and pay how much they should be paying, then of course.
There's no way it's a burden. Can you imagine if the US economy was like Venezuela, where every time we printed a dollar, it would just stay here, and the amount of inflation that we would have if we were not the reserve currency would be obscene. We would have
no, it is a burden. It is a burden supplying the rest of the world. It may be beneficial to us. If I don't want it different, that doesn't mean that it's not a burden, though. So benefit and a burden is not the same. We are subsidizing
but the
rest of the world.
But the benefit redonkulously outpaces the burden.
So that's the argument, though, Mauricio. the argument is, Mauricio, that it doesn't outweigh every single country, because some countries it benefits that country more than it benefits us. Like you just brought up Canada. I love Canada, but they only spend 1.4% of their GDP on defense because they don't have to. They have all the same protections we have.
Much rather the Canadian dollar be the reserve currency, so we get that burden off of us.
That's not what I'm saying. What I'm saying is the benefit that they're getting from our defense spending is outsized to another country like Poland, who spends 4.1% of their GDP. So they're getting more benefits. So the calculus on those two arguments of what the benefit we are getting, you have to take it all as an entire whole. You can't just say
there's no mathematical equation where the benefit of being the reserve currency doesn't always outweigh as a whole.
Mauricio, what you're saying is just absolutely ridiculous. I'm kidding. If you hadn't said it, I was going to say the exact same thing. They'd be attacking me now. So thank you for stepping up.
How many reserve currencies have lasted?
Not long. They don't
Not
last
long.
long.
And do you know why? Because the system got so abusive and the debt and the offshoring got so bad, it collapsed them. It's only a burden if we're not playing by the rules. We make the rules. The idea that other people get to abuse us because we are the world currency is not right. So they should be paying their fair share, or they should be penalized for it. That's crazy that we have to say that.
But them paying their fair share is a different statement than being the reserve currency is more of a burden than a benefit. That's all I'm saying.
We never said that. You stepped in and said that you made the argument. You basically created an argument and won it. Like
Dude, that's what I excel at.
Here's what I think Mauricio's point is. It's very obvious to us when there's downsides, when we're getting, I'm not even going to use the word taken advantage of. Maybe we're getting taken advantage of, but it's very obvious to us what the downsides of having the reserve currency are, because most of them are pretty clearly focused on our debt and our deficit. It's focused on our ability to balance our budget. What we don't realize, because it's more complicated and you have to understand, and I know you guys do, but a lot of people out there who are listening, or people out there who don't listen to the show, the ones that do are smart enough to realize this.
I'm about to correct you again, Jay. Yeah. Our listeners know.
Our listeners absolutely understand this, but the ones that don't listen to this don't understand the tremendous value of having the reserve currency and how it basically puts us on a pedestal that no other country. We control the currency essentially of every other country on the planet. For
the record, Trump recognizes this. He's come straight out, and I think his quote was saying, "If you want to go the fast ticket down to third world status, you lose your reserve currency." So he recognizes it.
Absolutely, and I'm not arguing that.
Getting abused leads us. That's what I'm saying. The way we get abused leads you to end your holdings of the reserve currency. This is what happens. You leverage, you don't produce. Other countries take advantage. As they build up, they're in a better spot. And that actual benefit turns to be your demise. It doesn't have to be that way. But when you have people that say, we're supposed to be committing 2 to 3% of our GDP to this, and none of us are doing it, we're like half of that or less. In America, it's okay because you'll just make up the difference here. We get the benefits from it. Right? Everybody gets the benefits. You have to play by these rules. We play by different rules, and we just take it on the chin time and time and time again and don't do anything about it. That ends up to be a system. And
Mauricio, before you jump in, like when he says take it on the chin, like that doesn't mean we're saying it's outweighing the benefits of having the reserve currency. What we're saying is certain countries are getting more benefit.
Like, I would much rather let me give you a ridiculous example, but I would much rather have the reserve currency and have China abuse us up the wazoo than China playing fair.
Why
and us
do you
not
have
having the
to
reserve
choose?
Currency.
Mauricio, that's crazy. We're the reserve currency. Why do you have to choose? You don't have to choose. You realize that, guys.
Well, but the Triffin's paradox.
But the argument that is we like the reserve currency, so we have to be abused, That is the dumbest argument ever. We don't need to be abused, and we can keep the reserve currency.
And the point we were trying to make, Mauricio, is certain countries are getting more benefits than others, and to even to say that we want to even the playing field and make it so everybody is playing even and paying their fair share. I don't think that's wrong. And just to point out, as you brought up, like these rules were made in 1973 or whatever. Like we're still working on rules from, it was much different. The US was a 40% GDP or debt to GDP at the time. And like it was a much different world at the time.
Check out the countries that were in the Plaza Accord: Japan, West Germany. Everybody remember West Germany? France, and the UK.
Let me point something out, and I just want to clear something up because I think we get a little bit lost in assuming what we've seen over the last 100 years of globalization actually held before then. Most reserve currencies, and there's arguments over whether reserve currencies really even existed in the same sense that they do now because we didn't have globalization. People in Spain weren't necessarily weren't going to Australia and spending money. But for the most part, the things that we kind of call reserve currencies, one of the big reasons they get lost over time is war. Countries that have the reserve currency get conquered and some other country takes over the reserve currency. We saw that with the pound.
Every empire gets straight over by war, but it's the economic part that gets to it.
The only reason no one invades Spain is because the U.S. polices them, because Spain only spends 1.3% of their GDP on defense.
But that's my point, is that one of the things we need to do if we want to preserve our status as the world's reserve currency is we need to be willing to step up. I'm not saying it's fair. I'm not saying it's right. But at the end of the day, we're going to do it. We have to do it. And yeah, can we punish other countries for not doing their fair share? Absolutely. But we can't just sit back and we can't sit back and say we're not paying anymore. We're cutting our defense budget to zero. And if Spain doesn't pay, well, they don't get the benefit of us because we're not going to spend any money either. No, we're still spending the money. Maybe we'll keep getting screwed, but we're going to keep spending the money because
they could fall into a different bucket as far as what they get in return. And that can be renegotiated, like since 1973. Those were the old rules. So I think, first of all, I don't know about your opinion, but if he could pull this off and do a good job of it, first of all, the arguments for why I think it might happen. First of all, it would be called the Mar-a-Lago Accord, and we all know Trump loves Mar-a-Lago, and that would just absolutely solidify the name Mar-a-Lago in history for the rest of time. Right? We still talk about Bretton Woods agreement from 100 years ago. The name Mar-a-Lago would, for the rest of time, be in history. So that's a huge plus for him to just alone to get to do this. But the idea, if we just step back and we think the idea, there's two options if this is actually his plan. The two options are basically one, that everybody in his administration know this is going on and they're all on the same page and they're just all playing coy and they're just doing a really good job of being coy about it. Or two, only a few people in the administration actually know about it and they're playing dumb and they're acting like it's not going to happen and they're just going to throw it on everybody, including the rest of the administration. And to me, to have that's the way the government works. First of all, that everyone's in on this and they're playing coy. That idea to me, like the government's just not that functional, right? Like there would be leaks. Like we're living in an internet age. There's no way that this is the end plan and it hasn't come out if everyone knows it.
Yeah, I was just going to say, I think what we're seeing here is Trump heard some snippets about there's this paper or maybe Mirren came in and gave him a 3-hour overview of this is how it works. And what Trump heard was massive tariffs. And he was like, okay, there's other stuff, but I heard massive tariffs. So we're
Say no more.
Right. And here's part of the problem. And this isn't
step
a knock
one, tariffs. Say no more. No, but there's a step 2 and 3. Step 1, tariffs. I heard everything I need to know.
This isn't a knock on Trump, but the reality is that to pull this off requires a ton of nuance. Basically, what they would need to do is they would need to weaken the dollar to the point where it's just barely still holding on as the reserve currency, but not quite any weaker, because any weaker we lose a reserve currency, any stronger and
Well,
and we lose-
unless there was an agreement to kind of peg it to the U.S. dollar, because that's what previous agreements had as well. Now we had the gold reserve to back it and everything, but
I think
Yeah,
that's
but remember
I think
the
that's
dollar,
unlikely.
I'm going to channel my inner Brent Johnson here. I mean, eventually we're going to have some kind of. Eventually, if we talked about the dollar milkshake theory on the podcast a couple of times. The ultimate result of that is that at some point the dollar is going to strengthen so much that it's going to cause these massive problems worldwide, and we're going to have to come back and renegotiate and do some kind of an accord, whether it's a Mar-a-Lago Accord or the Mauricio Raúl Palace Accord, like whatever we want to call it. But the reality is, right now we're not there. Like we're below 100 on the DXY. It's not like we're at like 200.
well, but you can't just use the DXY too, though, because the DXY was made back in '73 when the Europe was like our only trade partner. So now, if you look at the trade weighted U.S. Dollar index, it's much different than just the U.S.
But
the DXY.
is it at an all-time high right now where this is unprecedented territory where the dollar is so strong that it's causing all these kind of issues around the world?
But Mauricio, your point is true. There's, and Ray Dalio talks about this a lot. Either this will happen not on our terms, or it will happen on our terms. And the problem with it not on our terms is we don't know when or how. And once that starts to unravel, we won't have control anymore of it. So we can be proactive and we can say, this isn't working. And over the last few years, it's representative everything in our social orders in America, everything that's going on in the United States. We can either be proactive and tackle this on our terms, or this whole thing can unwind and it's out of control.
AJ, that's a great argument. Well, when was the last time you saw the U.S. government say, hey, you know what? We have a problem that's going to be happening in 10, 15 years. Like, I don't know, Social Security, but let's tackle the problem now because let's get ahead of it on our terms. When was the last time you saw that happen?
Never. So it's nice that we're actually saying this is an issue. Let's tackle it.
And even if he pulled this off, even Jay, I think, would be impressed, and he would say, hey, good job, Trump.
100%.
Dude, I will. That will have to be a DRE swag. Jay Scott saying, Trump, well done.
Jay promised me that he'd get a tattoo of Trump.
It would be Jay would do one of those like Al Qaeda hostage videos where he'd stand in front of the camera. He'd have to be like, he'd stand in front of the camera and he'd just be standing. He'd be like, hi, my name is Jay Scott. He's reading the page.
That should have been our fitness challenge thing. If Jay lost, he should have gotten a tattoo of Trump.
That would be great. I'm in on the. I don't even need incentive. I'm in if that's what the terms are.
I'm easy. Biden left office with a ridiculous $2 trillion deficit. If Trump can leave office with less than $8 trillion in additional debt, which is that $2 trillion deficit for 4 years, I will give him props.
Fair enough. All right. That was good. I like that, guys. That was an interesting discussion. Let's do a top 10. Actually, I'm only going to do.
Jay, that was Jay's idea. We put it off 2 weeks. Good discussion, Jay. That was great.
I'm only going to do top 8 this time because there's only 8 of them. So that's why I'm going to do a top 8. Because I wanted to point out, I did make this point a couple times because I thought it was important. The percentage of GDP that NATO countries are paying into defense. NATO is supposed to be kind of world police, but it's kind of become a little bit more outsized in certain people's favors. Back in 2014, they made a pact that they were all going to get to 2% of their GDP. A lot of people stepped up and did it. A lot of other countries did not. And so I'm going to point out the 8 peoples and I'm going to shame them. I'm going to shame those countries right now as far as people who are not stepping up.
How much sleep do you think they're going to lose over the fact that you are shaming them?
I mean,
Resign. They're going to resign.
The president of Luxembourg, who is bottom of the list at 1.3%, is going to listen to this tomorrow, and he might go and just like have to do a press conference and say we're going to do better. Him, Slovenia, and Belgium, and Spain, all of them, they're going to get together and they're all going to be like, we are the lowest in NATO. We're all doing 1.3% of our GDP. We've ridden on the coattails of US too long. We're going to step up. We're going to make changes. They're all at 1.3%.
And they're the ones screaming, take care of the Russia-Ukraine situation.
Jay, don't say anything. AJ already chimed in before. Canada, 1.4%. Canada makes a little bit more sense to me, considering they don't have any borders with anyone other than the U.S. versus those other countries. They're kind of in the thick of it. Like, it doesn't really make a lot of sense for me for them not to be spending on defense. They're at 1.4%. Italy, 1.5%. I guess they got a lot of water around them. Maybe that's their argument for not having to spend. But they're at 1.5%. Portugal, 1.6%. And then finally, Croatia, 1.8%. Everybody else has stepped up, gone above 2%. Poland, actually, props to Poland.
Even Ukraine is spending more than 2%.
Ukraine is not part of NATO.
They're spending 50% of their GDP. It's just with our money.
Yeah, I think it was 40 some, but it's pretty close to 50. And also, you notice Russia isn't on here, but Russia, the last I read, they're only spending like 6% of their GDP on defense and military, which doesn't seem like that high considering what's going on.
Okay, China's taking care of the rest.
Yeah, shout out to a couple countries. First of all, Poland. They're more than the U.S. They're 4.1% of their GDP. So shout out to them.
Go!
They're also kind of in the thick of it right now, too. They share a border with a war.
They just upped it big time this year, wasn't it?
Yeah, exactly. And Estonia, right in there, right in line with the U.S., 3.4% there. So, yeah, props to those people. Everyone else, step up your game. Jay, you got any hypotheticals for us?
$5 million
No.
if you never talk to your best friend again.
Jay, would you give up talking to me ever again?
I was literally about to make that joke about you. Not a joke. I was literally about to point that out about you, Kyle. And I would not give you up for $5 million.
I go
6.
so like
you're gone. But
6,
5,
you're gone.
it's funny when you say never again. That's tough, but at the same time, like best man at my wedding, like he's lives back in Canada, and I will regularly go a month, sometimes 2 months without even talking to him, and then when you see him and you talk to him, it's just like you never missed a beat. So I think it's a bit different discussion for some people than others.
Mauricio, I know, doesn't have friends, so it's really a hypothetical.
Yeah, I don't have any best friend unless isn't your spouse your best friend?
Ooh,
that can't be obviously included. That doesn't work.
Would you think she would stop talking to you for $5 million, Mauricio?
Dude, she started talking to me for like 10 grand.
that's his perfect marriage, right? Just no talking.
And you got $5 million bucks.
Can't say no if you can't talk. All right, let's wrap this up. So next week, are we recording on Tuesday?
Mauricio?
We're going to record on Saturday at 3 p.m.
You do have kids, don't you, Mauricio? I thought I saw there somewhere in the show notes. All right, good episode, guys. AJ, we kept it under the hour and a half mark.
Love
so
you guys are awesome.
I think you're good. You could actually pick up your kids. They're not going to be sitting out in the cold waiting for you. So yeah, good effort, guys. So as far as I know, until Mauricio tries to change his mind again, my drink's gone. Got to go hit the head. So I will see you next Thursday.
And I guess we get no plugs this week.
Guess not.
See ya.
No. See you guys.